In this video, I'm going to walk you through my game plan for this week because there are some crucial levels that, if broken, are going to lead to massive moves this week on SPY and on other tickers on the market. I'm going to walk you through what I'm looking for and how I'm planning on playing it. What's up, everyone? I'm Tony. This is Real Life Trading. We have been teaching others how to trade the stock market for over 10 years and are one of the highest rated stock market education companies in the world for a reason. And that's because we are extremely good at teaching others how to become consistently profitable traders for the rest of their lives. So check out the link down below to learn more about us or to get free trading courses, completely free for beginners and advanced traders. We just want you to succeed in trading. So that's our gift to you. Check out those links down below in the description. All right, so what am I looking for this week here on the charts? Let's look at SPY here real fast. So we are into our first area where the bulls should buy. We got there last week. Not a whole lot of buyers coming in. A small lower wick came through. There were some, but it wasn't all that great. Now we're having some turmoil all over the place around the world, and the markets are starting to freak out. So to get a better insight on what that's doing, let's zoom on over to the futures here real quick. So the futures were gapping down yesterday pretty hard, right back into the support, but it got bought up extremely fast. It closed really nice. This is on a 2-hour time frame, and then it ran back up, and it ran right back up into this trend line that we've been watching here for about a week or so. This has been a pretty good rejection off of it. If for whatever reason the bulls start getting closures up above this green trend line, that could open the door for a very strong bear squeeze. There are a lot of people bearish on this market. I mean, there's not a whole lot of great things coming out of all the turmoil going on. It is likely that the markets could try to squeeze people out, make it to their all-time highs, and then from there, that's where we need to be really cautious, and that's where we need to be worried, because once we get to all-time highs, if it doesn't close very strong up there, we could be having a large drop down. Could we be dropping this week? Yes, it's very possible. If we get a little bit of a run up, great. I still expect a lot of bears to be around 596 this week. So 596 to 600 is where I would expect bears to be. Until we can get strong closures on a daily chart on SPY up above 600 this week, I do not trust the bulls. If we do get closures up above 600, retest should be bought up, and we should be working our way into all-time highs, our main profit-taking zone. That's where we should be. So that's the bull scenario. What happens if the bears step in? So let's say the bulls run this up into that 596 level and the bears come in hard, or the bears just step in right away because the futures actually look like they're ready to rotate back down. Well, the next areas that I would be watching would be around 585 to 575. That's my next key buying area for these bulls to step back in. So if we start taking out the low of Friday, that should open the door for quite a bit of selling, and it should go to 585 relatively quickly. I would say within a day or two, it should be a very strong bear move. The bulls really have to hold this first buying area. If they start showing weakness and they start giving this area up, we'll sink pretty hard. It could go, like I said, all the way down into like 575 area. This is a huge buying demand area and the last line in the sand for the bulls. So I think that there'll be a lot of bulls sitting here at 575. This should be a really good buy the dip opportunity to see if that will take us to an all-time high. The thing in trading that most people get stuck on so much is they're like, I want the guarantee of what it's going to do. And you're thinking the wrong way. You need to be thinking about probabilities. What's the probability that it's going to do something? Well, if the markets can close, not just get there, but actually close on a daily chart, it increases those probabilities. There's always a chance that it doesn't work out, of course, and that's why you've got to control your risk. Risk is huge in trading. You've got to control your risk. But if we can get those strong closures bullish above 600 this week on a daily chart at some point, the probability is we're working our way to all-time highs. If we start taking out below 592 this week, there's a very high probability that it will drop into 575. And then from there, this is your last little buying spot. So why do I say that that's our buying spot? Because on a weekly chart, that's back into our weekly EMAs. The 10 and the 20 EMA on a weekly chart is usually always a place where bulls are sitting. And so that increases our probabilities that bulls will step back in through there and push us higher. Do we have to bounce at all? No, we can fall right through. And so that's why it's important to put alerts in these areas, put notes in these areas, so that way you're sitting there looking like, all right, I just need to see, do the bulls step in here? Do I see a hammer coming through here? Do I see, momentum starting to shift? Do I see lower highs starting to break and double bottoms starting to form on an hourly? That's what you want to start looking for. So just because we get into buying areas doesn't mean necessarily you should buy. It's time to now start zooming into a smaller time frame, a 30-minute or an hourly, and start looking for the bulls to actually step in in this buying area. And you'll notice as well that my buying areas are not like a thin line. They're a box. It's anywhere in this area I would expect bulls to be based on previous price action. So the only thing really you need to be paying attention to this week is that 600 level and that 592 level. Put alerts on that, and that's going to set the tone for the week. Today or Tuesday, if we start closing up above those levels, expect a little bit of a retest and a strong close of the week with high probability. If we start closing down below 592 on Monday or Tuesday, the start of this week, I would expect it to probably fall off, maybe give us a little bit of a retest, but then fall off from there into this next buying spot. From there, who knows what it does. But if it doesn't buy here, we're going to have some serious dropping going on, and that is a possibility with everything going on around the world. I think that strong bulls will be here around 585 to 575. So just keep an eye on that. That's what I'm looking at doing. So my game plan, if we start to break these lows, I'll be day trading this down bearish, making some pretty easy money. And then I'm simply just going to look for the buy the dip opportunities to come in this area for some swing trades if I can get my setups on a smaller time frame to see if this will take us all back higher. Remember, whenever everyone is extremely bearish, it opens the door for strong bull moves. We've seen that over and over and over again. Every time we get these drops, they run. We get these drops, they run. The markets want to keep on running until they can make it to their final target. I don't believe we've hit that final target yet, but does that mean that we have to bounce? No, it doesn't. That's why we have to simply watch, let the market show us their hand, let the strength come in where they should be showing strength, and then see if we get some follow through. If we start going bullish through here at the start of this week and closing strongly on a daily time frame, remember, I don't care about a move there during the day. I want to see how it closes. That's the important part. Wait for the daily closure. Once we get that daily closure above 600 this week, if we do, I'm going to look for retests to get bought up and for that move to take us into an all-time high. So this should be pretty easy day trading opportunities and leaning a lot more bullish. You can also, again, do swing trades where you're buying trades, holding them overnight, and it's a little bit less management, so it's easier for people that have jobs, and we teach everyone how to do this in our links down below. We have free swing trading, free day trading courses, free just trading courses in general. And if you're experienced but are struggling to see consistent results, I have a free trading courses there for you for the guide to consistent profits. That's going to really help you figure out and diagnose what you're doing wrong in your trading and help you to get back on the right track and start bringing in some money. Again, completely for free, no strings attached. Enjoy those videos. We want to help you on your trading journey. So check out those things. They're down below in the description. So keep an eye out for these two big levels, my friends. This is all you need to know as a trader. Right here, what levels to watch. Let the markets show you their hands, because right here it's been a lot of chop. There isn't a whole lot of momentum here. If we can have the markets give us a little bit of momentum, show their hand on what they want to do, it's our job to recognize that and then simply press the button, accept the loss, and ride that momentum to profits. Understand where your targets need to be. If you go short, you shouldn't be holding much lower than 585 to 575. If you're like, oh, I think it's going to drop off, it's a good chance it's going to rampage up and you're going to lose all your money. So same thing, if you go up here and you go bullish, understand where you want to be taking your profits. That's around 610 to 615 area. Know when to get in, know when to get out. Don't stress about, could I get more? You're asking the wrong questions. What areas do you know are the key areas to watch? This area is the key profit taking zone. This area is the key profit taking zone, because this is where your bears should be stepping in. This is where your bulls should be stepping in. So if you're bullish, you need to be taking profits into an area where the bears should be coming in. If you're bearish, you need to be taking profits into the area where the bulls should be stepping in. And that's going to help you lock in wins and become a successful trader. Understanding when to take those profits is going to allow you to finally start getting those consistent results. Because again, everyone is focused on how can I make the most money? Do I hold on to more? It's like, you just need to get base hits. And every once in a while, you'll catch a runner that just gaps across this area and runs. Those are the ones that end up being monster wins. They don't happen very often. Everything else, it's like, I'm just trying to make 2 to 5% of my trading account when I'm right, and I'm trying to lose less than 1% of my trading account when I'm wrong. Play that math, hit base hits, and you'll be successful and start seeing those consistent results. Hopefully this game plan this week that I'm planning on following is going to help you guys. Again, just copy it and then just press the button when that time comes and let it play out. Win or lose, you know you're going to lose small or you're going to win big. And if you can just repeat that process over 100 trades, you're going to be a very successful trader. Make sure and hit subscribe so you don't miss my next week video. Every Monday I make videos to walk you through my game plan and show you exactly what I'm looking at so that I can pay my bills and keep living the life that I'm living. Love you guys. Have a great week. Follow your plan. Go make money. Change your life.